A few days ago, it was reported that February's inflation came in at 2.4%, except this measured a time before oil prices saw their largest increase since 2022. And if oil remains above $100 a barrel, we could soon see inflation hit 3.5% faster than a lot of people expect. For example, the national average for a gallon of gas jumped from $2.81 in January to $3.21 last week to $3.53 this week, which is a 10% increase in just 7 days. And if this trend continues, analysts warn that our current oil closure could become 3 times the severity of the Arab oil embargo of the 1970s, when the markets fell almost 45%. This is why the Federal Reserve is really in an impossible position, because on the one hand, the job market is softening, the economy is weakening, and personal savings is declining, which would benefit from lower rates. But on the other hand, oil is surging, prices are rising, and inflation might quickly return, which would require the Federal Reserve to raise interest rates so that everything doesn't get out of control. Essentially, this is the latest stagflation crisis that so many people were worried about. This occurs when inflation remains high during a time that unemployment increases, and current conditions could be the perfect storm for this to actually take place. So what does this mean for the stock market? Here's what's funny. A few months ago, I mentioned how interesting it was that not a single analyst forecasted that the stock market would end the year negative. Like back then, every single expectation was that the stock market would continue to skyrocket higher, with estimates for the S&P 500 ranging between 7,100 to 8,100 by the end of the year. But guess what? You want to know the last time every expert was unanimously bullish? 2008, right before the market fell 40%. And again in 2001, before the markets fell another 13%. Yeah, seriously. Anyway, I mention this because so far, the S&P 500 is trading about 5% from its all-time high. And even though there's certainly potential for it to continue falling further, at this point it's important to